What's going on, Bitcoin fam? Get ready for a rapid-fire update that's going to blow your mind. First up, we're diving deep into the conflicting forecasts from top analysts about Bitcoin's next move. Are we heading for a surge or a surprise correction? We've got XWIN Research and CryptoQuant weighing in, and the signals are hotter than ever. But hold up, the drama doesn't stop there. Bitcoin Core's upcoming V30 upgrade is sparking a massive debate between developers and purists. We're talking about the very essence of Bitcoin. Is it just for money, or can it carry more? This is a philosophical battle with real consequences for the network's future. Then, get ready for some serious institutional power. Chinese company Jiuzi Holdings is making waves by approving a staggering $1 billion crypto investment policy. We're talking major cash being allocated to Bitcoin and other digital assets. This could be a game changer for market adoption. And finally, we've got a crucial market indicator that might just be the calm before the crypto storm. Don't miss a single second of this explosive episode. Hit that subscribe button, ring the notification bell, and let's get into it. Bitcoin's volatility hits multi-year low, a calm before the storm. Is Bitcoin on the verge of a major move? Analysts at XWIN Research are sounding the alarm, pointing to implied volatility falling to its lowest level since 2023. This isn't just a number. Blockchain data suggests exchange reserves are drying up, meaning fewer coins are available for immediate sale. Historically, this situation has preceded significant price increases, turning a quiet market into a frenzy. The MVRV ratio remains neutral, indicating investors aren't rushing to sell or buy en masse, while derivatives markets show moderate funding rates, avoiding extreme leverage. It's a picture of unusual calm, but experts like Giulio Morno at CryptoQuant observed a recent surge in Bitcoin inflows to exchanges, hinting at underlying activity. However, Axel Adler Jr. from CryptoQuant sees a shift towards bear dominance, calling current price action mere corrective rallies. Adding to the complexity, Glassnode reports slowing inflows into U.S. spot Bitcoin ETFs, suggesting a pause in institutional demand. This divergence in analyst opinions is creating buzz across crypto communities, with many wondering if this low volatility is a precursor to another historic rally or a subtle shift in market sentiment. Don't go anywhere, because the story behind this Bitcoin calm might surprise you. Plus, we'll uncover a major internal conflict brewing within the Bitcoin community itself. Bitcoin Core upgrade sparks developer versus purist feud. Bitcoin's next major upgrade, V30, is here, and it's igniting a firestorm within the community. At its heart is a debate over the op-return function, which allows embedding data in transactions. Developers want to remove an 80-byte cap, opening up possibilities for more complex data, while purists fear it will lead to network spam and dilute Bitcoin's purpose as a financial tool. This isn't just a technical tweak, it's a clash of philosophies. Critics argue that lifting the cap could allow non-financial data, from NFTs to potentially illicit content, to permanently clutter the blockchain, increasing the burden on nodes and deviating from Bitcoin's original design as peer-to-peer cash. They champion alternatives like Bitcoin Knots, which strictly enforces financial-only transactions. On the other side, Bitcoin Core maintainers like Gloria Zhao argue that the change aligns with what miners already accept and that op-return is prunable, posing less long-term cost than other methods. They believe the fee market should dictate block space usage, not rigid rules. The controversy runs deeper, touching on suspicions of corporate influence and the very definition of Bitcoin's neutrality. Critics suggest the move aligns with the needs of Layer 2 projects like Citria, while developers maintain decisions are made transparently on GitHub. The debate is intensifying as node operators, miners, and businesses must decide whether to adopt V30, shaping Bitcoin's future purpose and identity. This internal battle is intense, but wait until you see the massive financial move a major Chinese company is making in the crypto space. Prepare for a billion-dollar announcement. Jiuzi Holdings approves $1 billion crypto treasury policy. Get ready for a seismic shift in corporate crypto adoption. Jiuzi Holdings, a Chinese company primarily known for its new energy vehicle charging stations, has just made a monumental announcement, a $1 billion crypto investment policy. This isn't pocket change. It's a formal approval to deploy significant cash reserves into digital assets, with Bitcoin and other cryptocurrencies being the initial focus. Under strict risk management, Jiuzi Holdings plans to allocate up to $1 billion, with any expansion beyond Bitcoin and initial crypto assets requiring further board approval. Crucially, the company will not self-custody its holdings, opting instead for top-tier third-party security providers. This strategic move is spearheaded by newly appointed COO Dr. Doug Bueger, an industry veteran who views crypto assets as a long-term hedge against macroeconomic uncertainties, not speculative trading. This decision places Jiuzi Holdings among a growing roster of corporations, including giants like Tesla and MicroStrategy, adding their balance sheets to the digital asset ecosystem. The market is reacting swiftly, with Jiuzi Holdings stock, JZXN, already surging over 40% in pre-market trading following the news. This $1 billion commitment from a company of Jiuzi's profile could signal a significant boost in institutional confidence and adoption. This massive investment is huge, but is it the biggest signal of what's to come? We've got one more crucial market indicator that you absolutely need to see. Bitcoin market signaling potential surge amidst low volatility. Pay close attention, because a key market indicator is flashing a signal that could precede a major Bitcoin price movement. Analysts at XWIN Research have highlighted that Bitcoin's implied volatility has plummeted to its lowest point since 2023. This isn't just a quiet market. It's a pattern that has historically preceded significant price rallies, with past instances seeing Bitcoin surge from $29,000 to all-time highs. Digging into the blockchain data, CryptoQuant's analysis reveals that Bitcoin reserves on exchanges are at multi-year lows. This scarcity indicates fewer coins are available for immediate sale, setting the stage for a potential supply shock if demand increases. While the MVRV ratio suggests investors are in a neutral stance, neither panicking nor aggressively taking profits, and funding rates on derivatives markets are moderate, indicating a lack of extreme leverage, the underlying conditions are ripe for a shift. Giulio Morno of CryptoQuant noted a recent uptick in Bitcoin inflows to trading platforms, adding another layer to the complex market picture. Despite some analysts like Axel Adler Jr. suggesting a bear market structure, and Glassnode observing a slowdown in institutional demand via ETF inflows, the prevailing sentiment among some experts is that this low volatility environment is a precursor to significant upward price action. The community is buzzing with speculation, watching closely to see if this, calm before the storm, will indeed lead to another Bitcoin breakout. That's a wrap on today's explosive news, but we're just getting started. Stick around for a lightning-fast recap and your full call to action. What a show! We saw analysts debating Bitcoin's future amidst record low volatility, a contentious upgrade dividing the Bitcoin core community, and Jiuzi Holdings stepping in with a massive $1 billion crypto investment. Don't miss out on the next big moves in crypto. Make sure you're subscribed, hit that notification bell so you never miss an update, smash that like button if you found this valuable, and follow us on all our socials for real-time insights. We'll see you in the next one.